Gold prices at in record highs, silver prices catching soon. Why are markets so divided? Which is one side equities which represent risk are at an all-time high. Gold which represents safety is at an all-time high. If we are in for a low rate and a lot of liquidity environment, is gold the right asset to buy? Will silver catch up? Or these are temporary uptakes which are not likely to sustain? Jonathan Barratt joins us now to understand the fundamental reason why gold prices are moving high. Jonathan, let's for a minute keep the technical, the momentum and the recent move in gold prices. Ultimately, any asset will sustain if there is underlying demand or if there is an underlying reason for the demand to sustain. Do you think the fundamental demand for gold will sustain for next couple of years?
I think that's a very interesting question. The next couple of years, I think at the moment the market is tiered to what the Fed have to say. What the Fed said last night was a reiteration that loose monetary policy would be here, while the markets, while coronavirus, while those issues are certainly there. So I think I really think that whilst we have this loose monetary policy, that momentum for gold will continue. Whether it lasts for 6 months, whether it lasts for 2 years, I think is very high. It has reached record levels. So I think if anything here, the fundamentals are still there, but whether over the next 2 years it'll continue to rise is another thing.
Okay, now the technical aspect. This breakout in gold, I think, has happened after 9-10 years. I mean, last time when we saw this kind of a movement in gold was when we had GFC and when the financial world was melting away. That pushed this urgency of investors to take a safe haven bet. What is safe haven about buying gold right now?
Look, I think here there's a couple of things which I think you've got to look at. And if we look at, obviously, the technical picture, we know the fundamental picture we've been discussing. And I think it does go, we're questioning in our mind why equity markets are continuing to rally. And of course, that is a result of the loose monetary policy that we're seeing. Now, we don't really understand the real reason why equities are rallying when we're seeing demand destruction sort of across the whole global economy. If anything, they should be coming lower. And then you'd have a good argument for gold. We have a good argument for gold because of monetary policy. So if things start to turn, will actually our ability to invest in gold also change? And I think it might. But at the end of the day, I think if we get turmoil in the markets, then I think people will move back to gold. But when we look at it at these current levels, we haven't got that turmoil in equity markets. So people aren't buying gold for that turmoil reason yet. I think it's more to do with just a loose monetary policy. So that might kick in, which might sustain prices to higher levels.
Do you think silver has a long way before it catches up? Because for the first time in many years, we've seen a wide divergence between gold and silver. There is a lot of literature available online which seems to be suggesting that silver has to catch up with gold.
Agreed, 100%. That's been a line we've been towing for some time. If you've missed the gold rally, then have a look at silver. I do believe that silver is one of those investments that should be looked at. When you compare back in 2011, we had the highs of around about $50 US an ounce. Gold, we're at those levels now. So effectively, we're about $25 under where silver should be. So I think if anything there, silver has that ability to catch up over the next couple of quarters. But mind you, would I be buying at these levels at the moment? Probably not. I'd be waiting for that dip to occur. I'd be waiting for that dip to occur not just in silver, but also in gold.
Okay, so Jonathan, in terms of what's already priced in now, with of course all the different factors, we've had the Fed statement coming in, the current situation, whether it's economically, politically, and so forth. Do you think all of that's factored in? What are the kind of targets you're setting now for gold going forward? Have the negatives been priced in? Is what I'm trying to understand.
Look, I don't think that. I don't think we can see the negatives yet. We know, we already know today what's happening, economic-wise and political risk side. Going forward, we know will things improve. Well, I guess if we get a vaccine, that's a different story. And then people can see the end of the tunnel in terms of a lot of those risks. But I still think there's also risks that we don't see and we haven't seen yet, which I think could help prices. When I look at where we think gold will actually move from here, I think around this, as long as it stays above 1930, for towards the end of the week, then we can assume that it will continue to trade higher. But if it does happen to break below that, then I think we go into consolidation pattern. And then it'll be the macros will then determine where we think gold, whether it will take it through to that 2,000, 2,500 level. I know there's a lot of people out there saying, but I don't think we've seen the reasons why it can take it to that 2,500, 3,000 mark, which some people are starting to talk about.
Okay, so also in terms of the dollar, with the government accumulating debt, the index already plummeting, how would you stack up the attractiveness of gold vis-a-vis the dollar? And, again, we've had a lot of comments coming in from the Fed last night as well. So whether it's the negative interest rates phenomenon already being priced in, is that all of these factors, how are they leading into perception on gold right now as an attractive buy?
I think the US dollar is a very interesting topic at the moment, because I think when you look at what policies the Fed will put in place to reduce debt or international debt, then are we going to go through another policy of the US having a weak dollar policy? And if that is the case, and we've seen the US dollar come under an enormous amount of pressure, if they continue to drive that down to 80, the index at 80 or 75, does that present a much better picture for the US economy? Well, yes, it does. So when I actually feel whether the US dollar can continue its decline, I think that's something I'd advocate, because I think that would make the US a stronger economy. Exports would be able to be a lot more competitively priced. So when it comes down to that economic side of it, that dollar can remain weak. If it remains weak, then that should also support gold prices as well. So I think the dollar is under pressure, and that might be one of the levels down the track that will see prices higher.
Jonathan, we'll leave it there. Appreciate your time. There certainly has been some very interesting activity within the precious metal space, gold and silver. Thanks very much for sharing your perspective there.